Well, let's get going here. My name is Caitlin. I am your assigned educator to the CREATE plan, and I work at Union Bank and Trust where we hold your 401k. So I am assigned to CREATE. My contact will be in the presentation here, but it is my job to answer any questions for you that you may have, no matter where you're located. So feel free to give me a call directly. Um, my job here is an educator. It's not to give advice. So if you do call me about your retirement account, I can't tell you what to do, but I can certainly talk all day on the options within the account. I'm not an advisor. I'm not licensed to give advice in that way. But again, I could probably get your questions answered more times than not. I do. What is my job, though? Just real quick, it is to answer questions about your 401k, not to give advice, navigate through the website, help you understand your investment options within the plan. And if I can't answer your questions, which is rare, I will get you to the right person here. We do have a client service staff. There is a direct line from CREATE to us here at UBT that you've probably called before. Our client service staff is just right across the hall from me. So you're never going to call anyone outside of our building here in Lincoln, Nebraska. So just know that there are things that client services can't answer for you that they will send you over to me to answer, but you can call either one of us or email me and happy to schedule something, especially if you're an employee there that's on the road, happy to schedule something in the future that we can chat, whether you're parked or at home for a little bit of time. Happy to set something up for you. So let's talk today about what to do with your money. It's a question we get a lot of times as people are leaving CREATE or retiring. And we're really going to be focusing around retirement. What can you do with your retirement account once you retire? So this is kind of today's agenda. We're going to go point by point here. So talk about leave it in the CREATE plan with UBT, cash it out, roll it over. What do fees look like, or how do I even access my money? And then a couple frequently asked questions that we get here at UBT, and we're going to go over those. So I'm going to try to get this all done within about a half an hour. If you could just hold off on questions until the end, I'll stop recording. It can take whatever time anyone needs to answer any extra questions that you may have. And again, this is recorded, so we'll get this back out there for you, both the audio and the visual for it, if you're looking for that in the future. All right, so let's talk about the number one thing, which is leave it in the CREATE plan. So when I say plan, I'm going to use that term a lot. I'm talking about the 401k plan here that UBT holds, that is offered to you through CREATE. So leave it all in the plan. So you're retiring, you're saying, hey, what can I do with my money? First thing we're going to tell you is leave it in the plan. Just like any other 401k plan, when you leave it here at UBT, you have it here set up for the rest of your retirement. You could take distributions, meaning you could take money out as needed. You can call us and say, hey, I need some money. You can set up a payment plan. I call it a payment plan. But let's say you're going to retire and start using money out of the 401k immediately to supplement your income. So you need a monthly, a biweekly income to come in just as you have your paychecks. You can set that up with us to do so. So you could say, I need to net $2,000 a month. We're going to get that all set up for you to be direct deposited, and you'll get that going. And then you don't have to call us all the time. But some people don't need to touch their money right away. Maybe they've got some other assets, or they're moving on to maybe a part-time career. We call it the second career, the second half. If you're not needing money immediately out of the 401k, it's okay. You don't have to take money out. You could just call us and say, hey, I'm redoing a bathroom. I need $5,000, things like that as needed, and we will get that money to you. If you leave your money in the plan, you would receive your RMDs right now. That's at age 73. An RMD is a required minimum distribution. It's when the government says you have to start taking money out of your 401k if you're not already doing so. So right now that age is 73 when you have to start taking money out of retirement accounts, simply because the government wants your tax money, and we'll get that to you. So if you're not already taking money out of your accounts, we'll make sure that you get those checks to avoid the penalty should you not take money out. There is a pretty hefty penalty that comes with that, and we're going to help you avoid that by sending you your RMD. But between retirement and the RMD age, you don't have to take money out. You can leave it here, just let it sit. and invest it the same way. We'll go over what you'd still have access to a little bit more in depth, but you would still have access to me as the educator. You'd have access to UBT, our client services, your online account, online investments. Nothing changes in your account once you retire. It is still here. It is still here for you to adjust as needed. The only thing that stops is that money can't go into the account. So money can come out as you need it, but it can't go into the account. So rollovers or contributions, because contributions or money going into the account have to come from payroll. And if you're not on payroll anymore, we can't put money into the account. So that's the limitation of a 401k in retirement. So CREAT charges or UBT charges you $0 in account fees. And this is the biggest thing that I talk about when I have folks that call me and say, hey, what can I do? What are my options? Well, you will not accrue an account fee on your 401k, which can be pretty significant. And we're going to go into that in a couple slides here about fees. But that is a big one. It is not something all companies do. CREAT does for you. And out of the 87 or 88 companies that I work with, besides CREAT, I would say only about 5 of them pay account fees for their employees. So it is a significant savings. We'll talk about kind of how that compares to, say, an IRA, but an account fee is different than an investment fee. An account fee is just like a checking savings account where you might accrue a monthly fee because the bank is holding your money. It's an administrative fee. You can consider it that way. And a lot of times that fee could be as high as 1% of your total account balance. In 401ks, it's often a lot lower because you're dealing with company accounts. There's a lot of money in there. And so the more the money, the lower the fee. And in this case, CREAT is paying it for you. So regardless of what UBT is charging CREAT to hold their 401ks for you all, they are paying the fee. They're paying it now, and they would continue doing that in retirement. So it can be a significant savings, and we'll get to that here in a couple minutes. Another option you have is to roll the money out of this into another employer plan should you be moving on from CREAT. So maybe not in retirement, you're going to leave CREAT and you don't know what to do with your 401k. Well, you can roll that right into your next employer 401k if they offer you one. Rollovers are not subject to penalties or taxes. So really it's taking your money out of one retirement account, rolling it directly into another retirement account, avoiding your personal checking account. When avoided and going from one retirement account to another, there's no penalties or taxes. There may be a rollover fee. I forget what it is to get to that here. Just the administrative costs of doing the investment sell-offs and then getting the check and all that stuff to your new employer plan or an IRA. But that's just a one-time small fee. Penalties, a lot of people think, well, if I move my money prior to age 59 and a half, well, I have that 10% fee. You will not have to pay taxes on what you're rolling over as long as it's avoiding your personal account and just going from one retirement account to another, you're going to avoid those penalties and taxes. You could roll it into a new employer plan. 401ks can be moved into other 401ks, 403bs, 457s. Those all mean that you're utilizing an employer plan. Now, it can be rolled into an IRA. So this is a very popular option that a lot of people use that I get a lot of phone calls about. So an IRA is an individual retirement account. That's something you can go to the bank and open up on your own. All the rules of retirement accounts apply to that IRA. It's just not associated with a company. So you have a 401k. That's a retirement account. An IRA is a retirement account, but it's on your own. It's basically saying you're the company. So no company can give you, say, that profit sharing or that match money. It's just an account on its own. So a lot of people open up an IRA and then they roll their 401k into that IRA and utilize that. One of the biggest reasons people do that is maybe they've had a couple employers over time and they've just had to move their money out of that 401k. Maybe they don't have enough money in there to leave it, things like that. And so they just have combined all of their former employer plans into one IRA. So you could certainly do that. Just to let you know, pre-tax and Roth. So within your 401k here at CREAT, you have 2 buckets of money that you could be putting into. That's pre-tax and Roth. They're both combined into the 401k, but the pre-tax means that money's coming out of your paycheck and going into the 401k without paying taxes. You'll deal with that in retirement. The Roth is when you're going to pay taxes as it goes in, and in retirement, you won't have to pay taxes. So if you have both buckets of money within your CREATE account, then you would have to open up two IRAs, one being a pre-tax IRA, one being a Roth. So you have two separate accounts that you could roll your 401k into, and we'll separate that money and get that into those appropriate IRAs. Now, with that being said, IRAs will cost you money because you're not working for a company with an IRA. You are going to have to pay those administrative fees on your own. Competitively, this is not a absolute, but competitively, the charges for IRAs, the administrative fees, are about 1%. 1% of what? It's 1% of your account balance. So as you fill that IRA higher and higher with more of your money, that 1% is going to equal more and more of your money. So CREATE charges you 0. An IRA would cost you 1%. If you have two IRAs, a pre-tax and a Roth, it's going to cost you 1% of both of those accounts. Okay. So once you roll into a Roth IRA, this is just an IRS rule, a Roth IRA, not a Roth 401k, but a Roth IRA, it has to stay a Roth IRA. Roth IRAs cannot be moved back into a 401k. So a pre-tax IRA, you could roll money into that, and let's say you go get another job and they offer you a 401k, you could actually move that back into a 401k. But once a Roth IRA, always a Roth IRA. So unfortunately, a lot of people will move their Roth 401ks into an IRA, and they're stuck paying that fee forever because they can't move it back into a 401k. So that is something to consider when moving into retirement. If you want to move your money out of the CREATE account, you would have to open up those two IRAs, and then you're going to be paying fees off that. So I like to tell people, this is kind of a joke that I make. It's probably a bad joke, but people, well, what is it going to cost me? Like, how much more is it going to cost me to utilize an IRA? And my thing is, if it's costing you more than 0, it's costing you more than it will at CREATE. So as far as administrative fees go, CREATE's 401k is a great option to leave your money there and utilize it as so in retirement because it's not costing you any money to have that. All right. Another side note, if you are retiring from CREATE, want to leave your money in that 401k, and maybe you have a pre-tax IRA already, you can move that into your CREATE account prior to retirement. So if you're looking to kind of combine some accounts, you could certainly take that pre-tax IRA and roll that into the CREATE 401k, but it has to be done prior to retirement. Because like I said, what happens when you retire with your account is no more money can go into the account. We could take it out, but we can't put it in. So if you do want to combine some accounts, the pre-tax IRA can move back over into your 401k. And if you have other 401ks at other companies, you're going to want to roll that into the CREATE account prior to retirement. So rolling it out is an option. Another option would be just cash it out. This one, I caution you, because when you cash out a 401k, let's say you've got $100,000 in there and you say, you know what, I don't want to leave it in the 401k. I just want to take it out. You are certainly allowed to do that. Okay. Just keep in mind that you will have taxes withheld on any pre-tax money that is in that account. So if that $100,000 in your 401k is all pre-tax, you're going to look at that as a $100,000 paycheck you're going to get all at once, and taxes will be withheld on that. If you are, well, I should say it this way. If you don't live in one of the states, the very few states that don't charge state income tax, then that will not be withheld. But for the rest of us that are, 5% state will be withheld and 20% federal will be withheld. You would receive a 1099-R at the end of the year, and you could look at that as your W-2. So you're going to take that and file your taxes with that. If you owe any extra money, because only the 5% and the 20% were withheld, you are going to be responsible for that. So if you are cashing out a 401k that is going to put you in a pretty high tax bracket, we're only withholding the 5 and the 20. So it's likely going to cost you a little bit more, which you're going to have to pay out of pocket. So it's something to keep in mind. A lot of people get a little confused. Let's say you work, you're going to be retiring this year. You're choosing October as your retirement date. So you've earned 10 months of salary there at Crete, and then you cash out your account. Both of those incomes are combined for the year. So you're going to want to keep that in mind. Cashing it out is not always the answer because it's going to cost you a lot of money up front with the pre-tax money. Plus, you've got all this money. It's a big chunk of change in your hands, but it is an option for you as you are retiring. So just keep in mind, though, the biggest thing that people forget or don't realize is that cashing out a 401k, getting it all out of there, that is all income if it's pre-tax money because you haven't paid taxes on it. So you can look at that check as an income for the year, and you're going to have to pay taxes on that right away. So it could be a pretty hefty tax year for you instead of spreading it out over a period of time. But cashing out, an option for you. All right, moving into those fees a little bit more. So again, we don't charge administrative fees where an IRA might be 1%. And that's per year. Usually it's broken down into quarters. But that could be a significant amount of money, especially if the market takes off and you've earned a bunch of money in that account. For that year, they're still charging you that 1%. So as the money goes up, so does that 1%. Now, there's always market value fees. So if you open up a statement, which a lot of you received in the last 2 weeks or so, you'll see at the bottom, the third page, it'll say market value fee, and you'll have a small fee with that. That is associated with how many shares you've purchased with your investment. So as money goes in every week with Crete, your money, Crete's match money. In January, we had that big chunk of profit sharing money. You're buying shares to your investments. A lot of folks there at Crete are using target date funds, which have the lowest fee to them, which is 0.08%. So a lot of times the fees that I see as people call me, we look at a quarterly statement, usually $10, $15, something like that. That has nothing to do with the account balance. It has nothing to do with the administrative fee. It's just simply the cost to do the trading. If you do trade throughout the quarter, you will be charged for the purchase of your new shares. So let's say you take $10,000 and you move it out of a target date fund and you put it in the Vanguard Institutional Index, there's a fee associated with the purchase of those shares. Very small, but it's there, and that's going to show up in your fees. Okay, but there's never administrative fees. If you have an IRA, you're going to have your administrative fee plus your market value fee for the purchase of those shares, especially the first time that you roll this 401k into the IRA. You're going to have a pretty high market value fee because you've just purchased a lot of shares to get your investments going. Okay. Again, the administrative fees, you're not being charged that as an active employee, and you will not be charged that as an inactive employee. So it will save a significant amount of money. Now, we do have other expenses with the plan. You're not going to be able to avoid these no matter what company you work for. This is a pretty across the board fee schedule. So what this is a distribution fee. Let's say you're retired and you say, you know what, I need that $2,000 a month. I just want to get that going. I want that every month wired into my account, my checking account. We're going to get it set up like this. We're going to charge you a $60 setup fee for the distribution, and we're going to charge you a one-time $35 wire transfer fee, and that's it. That's the one-time fee that you're going to accrue if you schedule ongoing distributions. So a payment plan, as I like to call it. Now, if you don't want that, you just say, you know what, I'm retiring. I'm just going to call when I need the money. I'm going to go on vacation. I want to purchase a new vehicle, things like that. Every time you call and you say, hey, I need some money out, we're going to charge you that $60 distribution fee plus the $35. It's just a one-time fee to get it all set up. But if we're setting you up on a payment plan, then that's just the one-time setup. I would highly encourage you to utilize that payment plan if you know you're going to have regularly set up distributions. And those can be monthly, biweekly, every 6 months, every quarter. But if you know you're going to be calling on a regular basis, it might be a good idea to just get that one-time fee out of the way and it not happen anymore. But if you are one of those that just needs to call when needed, it may behoove you to just pay the one-time $60 and $35 fee when you need it. So it could be just once a year. It wouldn't make a difference there. So it's up to you, but just know that there is some distribution fees associated with setting that up, whether it's a regular payment plan or a one-timer. But that'll just be taken right out of your retirement account instead of you having to pay it out of pocket. We'll just take out a little bit more. When it comes to distributions too, as you're setting those up in retirement, we're going to make sure that you're getting a net amount that you need. Okay, so taxes will be withheld on the pre-tax side of things. But if you say, I need to net, take home, see it in my account, $2,000 a month, we're going to take out a little bit more to cover what we have to withhold for your taxes and the distribution fee. Okay, so we're always going to make sure you get what you need and then just withdraw a little bit more to cover your taxes. And then we will always send you a 1099-R at the end of the year to say this is how much Caitlin pulled out of the account. This is how much taxes we withheld. And you'll be able to file your taxes with that. Nice and easy. All those documents are supplied to you. Oh, here's a little thing. So the CREAT account, the fee is 0%. IRAs could be 1% annually. Let's say you have a balance of $100,000. Your administrative fee is going to cost you $0 with UBT, and with an IRA, it's going to cost you $1,000. So just something to consider because that is money that you don't necessarily have to pay if you just leave it with the CREAT UBT plan. You do receive a fee disclosure once a year via mail. In that fee disclosure, it is going to have this in it. So where you are going to see your expenses is, I believe it's on the second page of that fee disclosure. This is what it looks like. this is literally a copy and paste from the fees disclosure to lay out various just administrative costs should you call to get a distribution. But we've been through that before a couple slides ago. So all of that has been explained to you. But there is no administrative fee on here, as you can see, because CREAT is paying that for you. So significant savings on the CREAT side. All right, so how do I access my money in retirement? The same way that you access it now. Nothing changes with your account. So ubt.com/RPS, that's where you're logging in right now with your username and password. If you forget what that is, you can call client services or me. We'll get you reset. I would call client services first. That's our main line. CREAT has another, I believe it's an 866 number that you all would have access to that they would give you. I didn't put that on here. I apologize. You could certainly call this 402 number. That's going to get you to the same place. But we do have a client service staff member that specifically takes CREAT calls. He's the guy. His name, oh my gosh, I'm blanking on his name. I shouldn't. It'll come to me. But if you've called before that 866 number, you've talked to him. He's a great guy. He used to be a driver many, many years ago, and he's just great. He's great at talking to you. He's a very social human being. So if you need anything, there's various numbers you can call. But that would be the same now as it is in retirement. So nothing changes. You would be able to set up your distribution withdrawal online if you wanted to. There is a tab at the top of your screen that says withdrawals, but a lot of people just call and get it set up. It's a little bit easier to talk through that. But if you were to set up something online and walk through that process, we will have a client service staff call you to verify that you requested that online. So we have a lot of security put in place to make sure that it was you that made that online request. Okay. When you need money, whether you call us or set it up online, once we have everything signed, it does take about 7 to 10 days to get all that processed and to you. So if you are looking for something, let's say you want to purchase a new vehicle, want to take some money out, please know that it's going to take that 7 to 10 days to get that all processed. So if you need something tomorrow, it is on a very, very rare occasion that we can push that through just because we do work with over 300 other companies besides CREAT. So they are processing distributions all day long. But it is a tedious process on our end of things to get things going. So please just be patient when you call us to get a distribution set up. But again, another reason why setting up a payment plan is a really great alternative because you don't have to call and wait for that to be processed. If you want it on the first of the month, we're going to get that direct deposited to you on the first of the month, and it's all going to be good. Another thing too, with accessing your money, if you do set up yourself for a payment plan, you're getting regular distributions on a monthly or biweekly basis, but you do need a little bit more. You do want to go on vacation. You could certainly call us and get another distribution set up for yourself. Not a problem. Anytime you need money out of there, we can do that. It's just a little bit easier for those folks who are going to take regularly scheduled ones to get that scheduled so you don't have to worry about anything. But you could still access your money. You can still see your investments online. So let me go back here. You still have access to investments. So even in retirement, the day you retire, your investments don't change unless you want them to change. So you can make trades, you can make changes to those investments anytime you want. If you haven't been online to do so before, just know that you cannot call us and say, make this trade for me. I can't do that. There's security behind that where you have to do it on the website. I am more than happy to walk you through that though. I'm real good at, I can get your account open on my end. You've got it open on your end. I'll walk you through it to make the changes that you want to do. But we just make sure that all investments are within your control and your control only. So if you did want to make any changes to your investments in retirement, it's entirely up to you as it is right now. So once again, the only thing changes with your online account is that money cannot be put into the plan once you are no longer on payroll with CREATE, whether it's in retirement or just moving on from your employment there. All right, so some frequently asked questions. Does CREATE have access to my funds? You wouldn't believe how many times I've been asked this. So we at UBT, a Union Bank, hold the account. It is under the umbrella of CREATE, but they do not work for the bank. Therefore, they do not have access to your funds. Your account is at a bank. We are the fiduciaries over your account, but we are contracted with CREATE to hold that. So no, they are not logging in and looking at your accounts. They can't do that. They could certainly see things on the payroll side, but they cannot get into your account and make changes to the investments. I get that question a lot, actually. That's not the case. So once you retire and you're not on the payroll side of things, yes, they could see your name under the account. I believe they can see a balance. I'm not even really sure, but your account is held at a bank called Union Bank and Trust here in Lincoln, Nebraska, and that is where your money is. Another question, will I receive my last profit sharing contribution? Okay, so those of you age 65 and older ready to retire, at any point in the year that you retire, you will receive that last profit sharing that you are eligible for the following January. So there will be something that goes back into your account at a later time. We have had people retire, they roll their money out of the account, and then come January, they've got another deposit in there from that profit sharing. So just know that that will happen to you, especially if you meet all the criteria to do so. So age 65 is the plan's retirement date. So that's when they consider that retirement, plus working that 1,000 hours. Now, for those of you who are just moving on in your employment, profit sharing does require you to be employed on December 31st of the year and have worked 1,000 hours. So in that case, if you're just moving on from your employment in the middle of the year, say come June, unfortunately, that profit sharing would not be put into your account. So for those retirees, yes, you're going to get your profit sharing that following year. But those of you just moving on, you will not. So I like to tell people, if you are moving on from your employment and you're coming up on the end of the year, just make it like January 5th so you can get that profit sharing for the year that you're eligible to get. How soon can I start taking money out of my account? Okay, so this is a question we get for both retirees and just folks moving on. So your account, your retirement account is really split into different sources of money. One is your contribution, what you have put in through your paycheck. We've got the profit sharing, which hits your account in January, and then the match money. So profit sharing and match are CREATE contributions that go into your account. So our plan actually lists out that it takes about 6 months for you to have access to the profit sharing and the match. Okay, this is for anyone 59 and a half or younger. Okay, so once you hit 59 and a half, you would have access to the profit sharing and the match. Now, this is waived for death and disability. So if you're younger than 59 and a half, something happens to you, you could get to that money. Again, it's an IRS rule, kind of opens up the gates for you to have access to those funds. But if you're just moving on from employment, just know that it takes about 6 months for you to have access to the CREAT side of things. So those profit sharing and match buckets. Your contribution, we do just ask a 20-day wait period. So if we get some frantic calls from folks, this is kind of across the board with all plans, but people quit and they need the money ASAP. Unfortunately, we've got to make sure that payroll is done paying you. We don't get your termination status, whether it's retirement or just quitting, until the next payroll period. So that's just something with payroll. That's on the CREAT side where we are not alerted to your termination date or your retirement date, except the new payroll as it's processed. So we are at the mercy of what your payroll gives us. So we do ask for that 20-day wait period just to shore everything up. Because a lot of times you're quitting, a lot of people will quit the day before you get paid. So if you get paid on Friday, they're quitting on a Thursday, or they get paid, they quit on that Friday. We've got to wait for all the payroll to get shored up for you to get your last payroll check, and then for us to get your contribution to put it into your account. It usually takes a day or two for all that to get processed too. We try to get into your account as soon as possible, but we've got to buy investments and things like that. So there is a 20-day wait. So plan ahead. Certainly, if you're retiring and want to get some things set up for future distributions to be set up, you can call us a little bit early. We'll get that paperwork to you. It's a little bit easier on that end. But if you're frantically calling us because you need your account balance tomorrow, I'm just going to tell you it's just not going to happen that way. We have to make sure that the CREAT payroll is settled, and then they send money over to us for your 401k. We do not do your payroll. We are just one of the people or entities that they're sending money to in your name to make sure it gets into your account here over at UBT. So in retirement, over the age of 59 and a half, it's a little bit different. You can get access to all the funds pretty quickly with that 20-day wait. But if you're just moving on from employment, younger than 59 and a half, you are going to have to wait a little bit for the profit sharing and match contribution. Distributions, again, can be lump sums, scheduled, future. We'll direct deposit that. If we could get direct deposit, that's a lot easier. Our client service staff handles all of the distributions. I do not. I'm actually not allowed to do it because we make sure that we have experts doing each of the jobs associated with retirement planning. So I couldn't tell you how the process works. I know there's paperwork or an online request, things like that. But here's what our plan manager, so there's me as an educator plan manager, deals with the legal side. She has said, just call us. If you have questions and this was not specific enough, we are more than happy to discuss your situation. What can we do to get you your money faster if it's a possibility? If you just have questions about what does direct deposit look like? There's some banks, online banks that we cannot direct deposit into. There's certain apps we cannot direct deposit into. So all of that will be worked out. You just have to call us and we'll talk through it. There's an answer for everything. We will get an answer for you. So don't hesitate to call and discuss, especially ahead of time. It's always better to call us ahead of time instead of waiting for that panic moment. So perks of staying with UBT and the CREAT plan. This is where I would highly encourage you to do so. You still have the same online access as you do right now. You have the same access to your investments as you do right now. You have the same access to me, your educator, as you do right now, and our client service staff and the bank as a whole. You have access to that. And you have lower fees because the lower fees are no fees. So you do not have to make any decisions in retirement to do anything right away. Okay. Unless you're 73 or older, when you have to start taking your RMDs right away. If you are still working and 73 or older, you do not have to take an RMD. An RMD is that required minimum distribution from any retirement account. If you are still actively employed, you do not have to take an RMD. But lower fees are the highlight of the CREAT plan. It's a very generous thing that they do, and it is a very rare thing that they do to pay your account fees for you. Here is my number if you need it. Our client service staff, if you need it. We are all under the same roof here in Lincoln, Nebraska. We can take your phone call. If you email me to set up a time in the future, more than happy to put something on the schedule ahead of time, do a Zoom or link call or just a phone call. That's completely fine too. If you haven't already downloaded our app, it's UBT Retirement. Our bank has 3 apps, UBT Go for banking, UBT Business, and then UBT Retirement. Download that retirement app. Your username and password will work on there. Very easy app to use. I find it very easy to use. It looks like the website, but a little bit easier with that. But reach out to me if you have questions. Thank you, everyone, so much.